video, we look at the scenario for auditing 300. In this video, we're going to be focusing on answering the question. As we go through the question, I'll assist you and guide you in terms of how you need to go about answering auditing type question. I know people would normally say auditing is hard, it is theory, and all kind of comments they have regarding the subject. However, I would like to let you know that auditing, as long as you're going to understand and love it, it's not a hard subject. Let us look at what we have here. Our first question says, use only the information under the heading background, excluding information provided in the working paper. So we are going to be looking only at the background information that we have, and to discuss any concerns relating to the management of Ayanda Mkhize Incorporation. Please note, where applicable, your answer should include the following relating to Ayanda Mkhize Incorporated: international standard on quality management for the firms that perform audit or review of the financial statements or other assurance or related engagement, which is ISQM1. And number 2, you need to take into account the South African Institution of the Chartered Accountants or SAICA Code of Professional Conduct, which is CPC. So in our answer, using only the background information, we are going to be answering the matters relating to ISQM1 as well as CPC. We are not going to be using the working paper. However, we're just going to be looking at the background. Just to make everyone remember what the background has, we're just going to have a quick look in terms of what we had in the background, and then we'll come back to the solution. Okay, we now have a background on the screen. In our background, we're told about the name of the company, that they have 26 partners, they have 140 staff members, and 12 administrators. We are also told that all partners of the firm are the members of SAICA as well as IRBA. So those were the part on the first paragraph. And on the second paragraph, we're told that the firm is going to use IRBA inspection process. They are not going to be doing the operating effectiveness assessment of the firm's quality management system. However, they're going to use information that has been determined by IRBA. So I had already said to you that it is incorrect for them to use information obtained by IRBA in their own quality management system assessment, as the firm is obliged to do their own work and not rely on the work performed by the other institution. And then we go down, while we're still on the background, that information that we have ascertained is information regarding them doing new service offering, which is to keep extra money for their clients. So I already had discussed to you that what was wrong was that they cannot keep the extra money. They do not know the source where it's coming from. And how did we know that the source, they don't know where it's coming from? It's because we have realized from the information that they've said that they do not ask their clients where they got the money from, which becomes our concern. So this takes us to the end of the background information which we needed to respond to. So we're then going to go back and see what we have in the solution, because what we have in the solution will help you to guide you in future how do you respond to the question that are similar in nature to what you see here. Now we are back to the solution to see what they have. But looking at the first part, it talks about firm's quality management, which obviously addresses ISQM1. And then they're saying the firm should establish the system of quality management in terms of ISQM1. They say MDA cannot rely on IRBA's inspection process. Future reliance will solely be placed on the IRBA inspection process to determine the operating effectiveness of the firm's quality system. So now what actually happened here, they have put the reliance on the IRBA inspection process. They cannot put reliance on the work that was done previously by the other institution on their future quality management systems. It isn't correct for them to put reliance on the work done by other institutions, because they have to conduct the inspection process on their own. So it is incorrect and is not in line with the requirement of ISQM, which requires that they do perform their own service or their own inspection process. The system quality management should consist of 8 components. So if you're looking at the ISQM1, it consists of 8 components, and you need to understand those components before you go to the test that addresses ISQM1. It's normally going to be a test 1 in your CTA or third year level. So you need to understand what are those 8 components. However, we're just going to look at those components while we're addressing this question. And then when we go down, a system of quality management includes the design, implementation, and operating and monitoring of the obviously system of internal control or quality management of the firm. So what does that mean? It means that a firm, when they have engagement or if they have accepted the engagement, they should have quality management design. That means they design how they're going to go about the quality management, and the implementation part, which is how they're going to go about doing it, and operation, as well as monitoring. That means they monitor it as the time goes to see that it is yielding the results they have planned to yield on this quality management process. IRPA inspection process only relate to monitoring and remediation process, obviously. And when we look at the responsibility, the overall responsibility and accountability of the system of quality management should be assigned to the chief executive officer or management partner. So what does that mean? When it comes to the quality management of the company, the responsibility lies with the partner of the audit firm as well as the CEO or the big boss of the company. You need to state that. By just stating that, you get 1 marks. It is very important to understand who bears the responsibility when it comes to the quality management of the company. And then the company should assign operational responsibility relating to monitoring and the remediation. The overall responsibility cannot be assigned to EBA, reduce the firm's responsibility of the quality management. So what we see here is that they are reducing, the audit firm is reducing their responsibility of the quality management by relying on the work done by IRBA. So that is not correct, and it is not in line with the ISQM1. Therefore, by just stating that, you will get 1 marks because you're addressing the concern that you have relating to the point that they have raised in the background information, which you just looked at. As I've already said that we have 8 components when it comes to ISQM1. We're going to look at each component in isolation and also discuss further and broaden in terms of the understanding of what has been put in the solution. So when you're looking at the risk assessment process, component 1, we're going to read and see what we have there. The firm should design and implement a risk assessment process to establish the quality objectives, identify and assess quality risk, and design and implement responses. And then they say the company cannot rely on the IRBA's inspection process, which is future reliance, will solely be placed on the IRBA inspection process to determine the operating effectiveness of the firm. So what you see here, you are saying what the firm should do and what they should not do. So what they should do, they should design and implement the risk assessment process to establish the quality objective and identify and assess the quality risk and design the implementation process. And what they have done by putting reliance on IRBA inspection, which is so on the background information, it is incorrect. Just by stating those 2 points, which is what you know, but as what you extracted from the scenario, you get 2 marks. It is important for you to understand that in auditing, it's not so hard. You just need to know how to extract the useful information and how to bring the information that you know to your solution or to your response. Let us look at the component number 2. Component number 2 looks at the governance and the leadership. So that component number 2 is looking at the governance of the firm or the company as well as the leadership. The firm must establish environment that support the system of quality management tone on the top. The lack of quality management should indicate a weak tone at the top. Future reliance will solely be placed on IRBA inspection and reduce responsibility. So what you see here is that as the director of the company, you should lead by example. So you are stating that the director of the company, by saying they're going to use information that has been extracted by IRBA in the inspection process, it is incorrect because now they are not setting a good tone from the top. They're expected to set a good tone from the top by not using the information they should not be using in order to identify the quality management of the company they are auditing. Number three, which is the component number three of the ISQM, is the relevant ethical requirements. The lack of quality management creates future reliance would solely be placed on IRBA inspection process and reduce reliability. So that will create self-interest rate and to professional competence and due care. So now you're saying that the relying on other third parties' information, that will put self-interest threat and also professional competence and due care. Why the professional competence and due care is raised here? It is because it is known that as a professional, you cannot use information that you've obtained from other source, but you need to do your own work that you're going to rely on. So by not using your own work that you're going to rely on, it makes a concern in terms of your professional competence. Can you even do your own work with regard to the subject matter? So that's why then there's a professional competency and due care. Then when looking at the self-interest rates, it means that you do not want to spend money on doing this actual work, but you're going to use the work of others so that you are going to be reducing the matters with regard to spending the money for the work. So relevant at the core requirements. So it is a bit of a concern in terms of them using the work of the others. And then monitoring and the remediation, which is component number 8. And if you're looking at that, the firm should design and perform monitoring and remediation activities and cannot rely on the external reviewer. But the firm cannot on an external reviewer to perform the monitoring and remedial activities. All in-house quality review will be discontinued. Monitoring and remediation in terms of ISQC1 should provide information about the quality management of the firm. IRBA's inspection process focuses mainly on audit engagement and not the quality management of the firm. Monitoring and the remediation should take place at least annually. IRBA inspection take place infrequently. So now when you're looking at monitoring and remediation, you should take into account that IRBA does not do an annual checks of each individual company. However, it happens based on their selection. They make the selection on an annual basis to say, these are the firm that we're going to be doing a quality management on them. And the quality management done by IRBA, it's not what the firm that is auditing the company should be doing. So it differs in nature. For that reason, the firm needs to do their own monitoring and a remediation, and also the assessment in terms of the quality management or quality review of the firm they have been appointed. So what actually the IRBA is doing and what the firm is doing is not the same or 100% the same. For that reason, the firm or the audit firm appointed to do the audit should still need to do the work. And we take into account that IRBA is not doing the work on the annual basis. For that reason, we have to understand that they have to still do the work regardless. And then let's look at the custody of the client's money. It was still covered on the background information. However, let us go and look at the components. We did not cover all the components because our background information did not address, we didn't have to address all the components. We just addressed the components that are relevant. Other components we will address in future when there are questions that requires us to address those components. But at this moment, we're just focusing on the components that were relevant based on the information that we extracted or we had received from the background information. Now let's go back to the custody of the client's asset. The audit firms performs audit service, and therefore ISQM1 should be applied consistently throughout the firm for all firms offering. Then component 3, and we'll go down. IMI and its staff should understand the relevant ethical requirements that the firm should adhere to. As a member of SACA and IRBA, the partner should adhere to SACA's and IRBA's Code of Professional Conduct. Holding money on behalf of the clients creates the threat to employees of the company, that the SACA members working on the company and not for the firm. In terms of the money, might be derived from illegal activity and is received in cash and no questions are asked. Holding clients' money whilst providing other professional service, performing the audit service, especially after considering illegal activities above, it creates threats. Clients is an audit client, they will keep custody of the extra money. That will create self-interest threats to professional behavior and objectivity. Becoming aware of non-compliance or suspected non-compliance with laws and regulation is also going to create the self-interest and intimidation threat to integrity and professional behavior. So what do we see here? By them holding the client's money and the money they don't even know where it's coming from, it created a self-interest threat to professional behavior and objectivity, because now by holding the cash, it might not be seen well by the public that you're holding the cash that you do not even know. So now they aren't going to even be able to be independent if they are going to receive commission on those money. So now there is an objectivity, because now they're going to treat these clients better than the other because they are holding their money and they're getting commission on that money by holding it. And then in terms of integrity, because they don't even know where this money is coming from, they might not be able to disclose the nature of that money if it happens to be coming from illegal activities, because they are benefiting from that money. And by not disclosing that money, it also creates a threat, because now they are not upholding the SICA and IRBA standard, which is required of the audit partners. So do you understand? This is not a theory. You just need to understand what you need to bring forward. Bring forward what is important, and it's not about theory. You just communicate the way that you should be communicating if you were to sit down and communicate with any person. For example, like you're speaking with me, that's how you should speak when you are doing an auditing type question. Speak as if you're speaking with a friend. That will make the auditing easier for you. Acceptance and continuance of the client's relationship and specific engagements, component 4. So when we're looking at the component 4, let's read what we have. The audit firm should consider judgments whether to accept new clients based on the information obtained about the integrity of the clients. It seems that the client is involved in illegal activity, as the money being deposited should be derived from illegal activities and is received in cash and no question is asked. The audit firm operational activities such as establishing a new service offering to increase the audit client should not lead to inappropriate judgments whether to accept the new clients or not. And then we're saying the audit firm should not accept the clients with questionable integrity to increase the audit clients. Now, when you're looking at this part when it's come to accepting an engagement, if you're a member of SICA and IRBA, when it comes to accepting the engagement, you should do professional judgment. You cannot just accept an audit client just because you need more clients. A lot of background checks need to be done. So it seems like they did not do the background checks on the basis of the fact this money is received in cash and it's deposited to the company's money, and they do not even ask where this money is coming from. They need to ask where this money is coming from. They need to put the judgments that is expected of them as the CAs as well as the RAs, so that is expected. So by them just accepting money, not asking where it's coming from, it raises the concerns in terms of them upholding the standard that is required of them by the professional body that they are registered to. So let's take us to the end of the first question, which we are doing. what I would like you to do, please follow me for more questions of this nature. If you have the question that you'd like me to do, just inbox me and let me know which question you want me to do. You can even give me the question, then we can look at it together. I wish you all the best in your third year while you're looking forward towards registration of your CTA. Thank you so much and enjoy the rest. Bye.